you guys did a lot of wholesaling and BRRRRing in the past. Is that something that's coming back now? I know you kind of mentioned it really quickly off air, like in terms of there's an opportunity for wholesaling. So I want to go into that, but you want to talk about BRRRRing first.
Yeah, Austin's got the wholesaling company, so I'll kind of address the BRRRRing side. The BRRRRing strategy is the same regardless of what asset class you're doing it on. In theory, the development plays that everyone is doing, it's really still a BRRRR. You're buying it. It's just a renovation. It's a lot bigger of a renovation, right? And then you're doing a refinance to pull out your capital, and then you're renting it out for the long term. We're doing the same thing even with the apartment buildings. Like when the 7plex that we bought last year, there was tenants in there, but that was so undervalued that really the process and the effort of the renovation side is just conversion to a legality purposes, right? So the BRRRR strategy is still working, and the properties that even Austin's looking at in Sudbury, they're still working on those as well, right? The reality is that today the dollars required are a lot higher, I find, right? So a lot of the entry level investments aren't making as much sense. Even the ones that I'm losing out in Toronto is to the guys that are coming in and they're buying like cash and they don't necessarily need financing, because we lost one that sold last week for like $950 or something. I'm like, no chance it's appraised at $950. I was trying to buy it at like $850, right? But
so sorry, when you say no chance of it being appraised at $950, is that after you do the repairs, or you're saying ahead?
Like this is the teardown. It was a teardown bungalow.
Got it. Okay.
I was going to buy it at $850. I'm like, no, that's a little bit higher. Worst case, put a little bit more down payment. Call it a day. Just go straight for development, anyways, right? But there's people that are buying these bungalows now all cash. If you're syndicating with like 4 people.
And do you think all the people that you were competing against were investors, none of them being end users? I'm just curious.
I was having that debate with someone as well. Like this was like a complete like
tear down. You can't even live in it.
You could gut it. You could gut it and renovate it and live in it if you wanted to,
okay,
right? But you're gonna spend another like at least 100 on the main floor and then another 100 in the basement had nothing in it, right?
Okay.
So we're talking at least 200 grand. So if you're buying it at 950, spending 200 on it, 1.15, why not just go buy the neighboring property that was sold for 1.15, right?
Yeah.
And it was a 50 lot though, so I understand why someone bought it at that, but it was only 100 in depth. Now the 50 lots are nice because you could sever it, go 25, 2 4plexes up. So it's worth a lot more to the right person, right?
Now, when you say 100 depth, what are you looking for? Like 120?
120 would be perfect for the garden suite.
Got it. Okay.
Right? But if there's no 120, you could still go 4 and 4 if you get a 50 because you can sever it, right?
Yes.
So for the people that know, like it's worth overpaying because really each lot you're just buying for 500 grand. The cost to build one of these 4plexes, even if you call it $1.5 million to $2 million, if you bought the land for 500 grand because you severed it, now you're in it for $2 million, going to appraise for 3 to 3.5, right?
There you go.
Or I guess maybe there's no garden suite, so a little bit less, but still, like the numbers are solid for the play. It just requires a lot of capital, and the most difficult thing that I've been doing is I've been trying to just go at it alone, right? Versus a lot of people are coming in with groups of money, 3-4 guys putting together capital, right? Where you can make those kind of calls and you can kind of buy a property in cash, hold it, and then just build it in the future.
And just to talk, we interviewed someone on our podcast yesterday.
Okay.
His name is Jaden. He's doing this strategy.
Yeah.
He has like investors, and they buy these properties in cash because like the numbers become tougher when you start to finance it at like higher valuations.
Right.
They buy it in cash so that the risk is like minimal. They can take their time with the development. They get financing on the construction, but like those are the people that you sometimes will be competing with, right? Like especially if it's on the market, like it's attractive to a lot of developers.
Yeah. Right. Okay.
So go on.
Talk to me about the wholesaling stuff. What are you seeing there? Like what's different now than even a year ago, and comparing it to like, when did you start doing that?
Late 2021.
Okay.
Late 2021.
Okay, go.
So in 2022, when interest rates started hiking, we found that a lot of buyers sort of stepped their foot off the pedal, especially fix and flippers, which is the prime market for wholesalers, right? Because you're buying distressed properties. And anyone who wanted to flip, yes, they would buy wholesale deals from time to time, but mostly you could pivot towards the MLS because you can throw in all sort of ludicrous conditions and sellers will end up accepting it because there was no other options, right?
Yeah.
What we're seeing right now is that sentiment has not only picked up on the home buyer side, which is probably what you're seeing, but also on the flipping. Like these flippers are coming back because they're seeing that buyers are going multiples on turnkey products. That being said, like some crappy properties that don't have development potential may not get multiples still on the MLS, right? But they're seeing this sort of discrepancy where these like distressed properties They can get it under market value, and once they fully renovate it, all of these buyers are jumping back in. So we've been going pretty hard onto the marketing aspect again, bringing more leads in, and we're having deals sell sight unseen, whereas before was not happening, right? Before it was not happening. It was definitely a struggle to move deals, but now it's become much more easier. So more walkthroughs, more interest, and we're seeing our open rates in our email. So we send it out to our email list.
Yeah.
So it was like 30% during 2023, like
Sure.
summer 2023, and then like late 2022. And now it's closer to high 40s, 50%.
That's rock star. Like 40-50% of people opening up an email. Just
Right.
out of curiosity, you're sending this to thousands upon thousands of
Yeah,
people, obviously, that you
2,000.
accumulated over time.
Here's the thing is we did cut some people off our email list. We
Sure.
never opened it. So
Right.
it is a
Makes
little bit
sense.
inflated.
I
but
call
yeah.
that cleansing. I love that shit.
Yeah.
Every year, right on my birthday, my team and I, if you haven't engaged with us like in a year and a half, we send out an email. Hey, like if you still want to engage, just let us know. If you don't reply back to that email, we get them out.
Right.
Like it's all about quality over quantity when it comes to kind of an email list. It's just funny that we're talking about that because I think it's so important for people who are watching that don't get impressed by people who have hundreds of thousands of names in an email list. If nobody's opening it, it means really shit. But going back to your point, 50% of people, that's a good email
high
rate.
40s, 50% of
Right.
people are opening. That being said, what I've noticed is that I don't want to be like overly bullish. It's some markets that are better than others, right? Like so if we're doing rural wholesaling, crickets.
Got it.
Unless the deal, like the numbers are spectacular, but a seller will very rarely, even if their property is ultra distressed, they won't sell it at the price that we need it for, right?
Right.
To attract investors. So it's more so these bigger
And is that
markets.
really, sorry to cut you off, buddy,
Yeah.
but is that because they've owned it for so long, like in terms of the rural guys, like those sellers, they've owned it
Yeah.
for so long, they don't really, maybe they're going into some type of distress situation right now, but why wouldn't they sell it at the price that you're looking for? Like, what do you
I think yeah, a lot of them will need money for either their next move. They're usually moving to a lower cost city. That's the vast majority from what we've been discussing, sellers, why they're selling. And sometimes alternatively in these rural areas, even if it's a good price, it will still sit on the MLS for a long time, even if it is a good price, because there's just not much sales volume and sales
Right.
activity going there, right?
Yep.
It's limited investor base. Whenever we wholesale deals anywhere close by the GTA or within an hour and a half driving distance, those are what start attracting multiples. We wholesaled a deal last year in Toronto. This was in East York. It was a detached house, quite small, 975 square feet. We wholesaled it for $680,000. Those were the opportunities that were there last year for people who wanted to pull the trigger. There's still opportunities today, but obviously market condition has shifted a bit.
And you said like that 680, was that kind of timing it with what Mayu was talking earlier about October, November kind of, or was that even earlier?
That was in November.
Okay, yeah. So it's funny, right?
Yeah.
Because what you said earlier, man, like we're seeing these numbers now, but I personally, and the good thing is with content, it's all recorded.
Right.
Yeah.
We were saying like the time that real estate really went on sale was from like September to December of last year. But people unfortunately hear it as, well, you're a fucking real estate broker. Obviously, you're going to be saying that. But now, I mean, if you can actually bring it up, if you go, Clyde, if you go to the Durham and the Brampton, doesn't matter, pick any one of them, buddy, whatever pops up first. Brampton, where all my paisans are from. You look at months of inventory here at 1.68 last month. In November of last year, 2023 in December, it was above 4 months.
Yeah.
Like that was the time when you had, as a buyer, so much selection. And I like to look at Brampton. And if you switch over to Durham as well there, Clyde, you guys can see, I mean, Durham's showing us 1.39. That's a month and essentially a week and a half. Like, that's how much inventory. If nobody's put another property for sale in Durham, that's all it would take for everything to be sold. Where again, comparing this to going back to December, November, October, you're looking at over 4.5 months, right?
Yeah.
Now, the caveat to this, though, I think, is we're in a scenario right now where sellers are, and you obviously know this way more than us, right? But sellers are holding off of the spring market because they've heard the same news that buyers have heard, right? Which is that rates are expected to come down. It went from April to now May to who knows when it's going to be, right? But there's this concern that you have a lot of people waiting to jump in on the spring market. I don't necessarily if we're going to see that big of a kind of spike up in inventory, right?
I agree.
But
Yep.
we'll have, like right now, I'd say, or at least a month ago, we were in that period of no sellers, a lot of buyers waiting, right? Which kind of caused the scenario that we're in right now. A little bit more sellers have trickled in February because realtors have kind of recommended that right now might be the perfect time, at least that's what I've heard, right? But there's still not enough supply, right? And just reality. I don't know if enough is really going to come.
If you found that video valuable and you want to watch the full discussion, click here for my podcast. If you want to watch more videos, click here.